All right, again, good evening. Thanks for coming out to Building Blocks. My name is Nate Talbot. I'm the executive director of the Detroit Blockchain Center. We're a nonprofit, if you haven't heard of us yet. We're a nonprofit, membership-run organization with the primary goal of pushing advocacy for blockchain and distributed ledger technologies throughout the Metro Detroit area. Our basis is throwing events like this. We're working on a conference. We're working on some community outreach programs, like providing an incentivized mesh network in Highland Park. We're working on a business incubator, so anybody who's like an entrepreneur, an existing business in anything related to blockchain or distributed ledger technology. We're working on a network for you to come in. Hopefully we can find some grant money for you, act as a network for you, maybe help as an incubator for you. And working with government legislation to try to make sure it aligns with the legislation that they put in, aligns with the overall community's goals and moving forward without restricting us. And then our last component is education. We do a lot of free community education with technology, blockchain related stuff, financial literacy. So this is our first of events of what we're hoping to be a quarterly series related to fintech and blockchain technology. We're powered by Yodlee. And tonight we're going to have an open sort of panel discussion, followed by a Q&A, so you can maybe get some questions if we have enough time. And once our final live stream is up, once we get the queue, which we're up, we can get started. So with that, I'll let our panel take over, and we can do our introductions. And thank
you. Hello. All right, guys. Thank you, everyone, for joining us tonight. As Nate just mentioned here, we're really excited to be sponsoring the Detroit Blockchain Association. Some of you, I think I might have mentioned during the networking portion, one of the reasons I'm so excited to do this is it's actually my hometown. I'm from Shelby Township. Got my sister and cousin back there. We all grew up back in Shelby Township, and it's amazing to see what's happening here in Detroit. So it's really fun to come back and give back to the community that I once grew up in, and to see it be fostering. And excited here to talk to you guys a little bit more about Yodlee's APIs. We are a financial data aggregator and platform. So we don't have as many use cases in blockchain, but I'm hoping tonight, after the discussion we have, that maybe we'll create some new ones. Now I'm going to let the panel go ahead and introduce themselves, and also they'll be talking a little bit about, what fintech is. Fintech means a lot of different things to a lot of different people. So everyone will kind of share a little bit high level of what they think the word fintech means to them and how it relates to their company.
Hello, everyone. I'm David Bleznak. I'm the founder and CEO of Totle, and we've built out several solutions for exchange infrastructure and user interfaces so that individuals can manage and trade their crypto assets more easily.
Hi, everyone. Thanks, Yodlee, for putting this on. I'm Rob Konsdorf, CEO of EOS Detroit. We're a block producer on EOS, Telos, Warbly, and any other EOS.io chain that we deem to be worthy. So we're running the network itself. We operate somewhere between 20 and 30 servers. We also are working on teaching people about EOS and deploying local currency and mesh networks in Detroit in partnership with the Detroit Blockchain Center. So really excited for this panel, and I'll pass it on.
I'm Joe Todaro. I crypto investment fund. We invest strictly in crypto assets and have been doing this since 2013. I also run a partner with a medical blockchain company that we've built out over the last 18 months, and I'm a medical school dropout.
Well, guys, my name is Luke Jacobi, and I'm on the team here at Benzinga, and we work in the space of providing financial information. So if you see these crazy monitors set up over there, we've got a full team of writers, reporters, analysts who are, basically producing any sort of information that's going to move markets, whether it's equity markets, debt markets, crypto markets, etc.
Thank you, guys. So now we kind of went over a little bit high level of what they do in areas of fintech. And now we want to get into a little bit deeper with blockchain. Can you guys talk to me a little bit about what you think the opportunities and challenges are and touch on how regulation will play into that?
Yeah, there's a lot of open, a lot of white space and opportunity right now in crypto and in blockchain. I think this technology applies to every single industry. Similarly, how the internet has disrupted every industry, this technology will do the same. And so, for that reason, I think there's so much white space because there's not been a shift yet to these blockchains, to these platforms. Um, in terms of the masses and the greatest amounts of organizations. So being a part of that, whether it's permissioned chains and it's you know institutions that need to implement this technology to more easily or more efficiently administrate their information, all the way to logistics, to retail, to aerospace, and everywhere in between. There's an application, and so I think that there's great opportunity in building and applying the technology to all different companies. So what our organization Total does is we build software that allows individuals and institutions to trade the different crypto assets that are out there, and that's where we found the most growth and the most attraction in the near term, simply because there are very few users. Even though there's probably something like, I think it's estimated 50 million people in the world have touched crypto. I think that's close. Um, it has the potential to be billions very soon. So yeah, I think there's tons of opportunity. You asked about regulation as well. I think that's a ever fighting battle between the builders, the companies in this space, the networks, and the current government organizations. I mean, there's so many around the world, and they all approach this very differently. My main concern is really the U.S. I fear that if the U.S. doesn't approach crypto in a similar hands-off way they have to other industries that have developed greatly here, then we'll be left behind. And that's still really yet to be told. So it's really hard to comment on exactly what's going to happen. But I will say we're at a very pivotal moment or portion of time right now as the SEC and the CFTC continue to weigh rulings and make statements on what they're going to do in terms of how they're going to regulate these assets and what licenses you're going to need. Our group has really focused on the more permissionless system. So we've stayed away from a lot of the regulation, and we don't fear it. We simply think that this technology allows people all around the world to exchange value without the need for a third party or an intermediary, and that includes government bodies. So that's kind of where our stance is at the moment, and until we're proven or ruled otherwise, we continue to be a software company here in the U.S.
Thank you, David. So to reiterate the question, I believe it was, what is the opportunity of this market? This market being cryptocurrency, blockchain, distributed ledger technology, whatever you want to call it. There's probably 10 different names. I like to view it as a upgrade to the fundamental way the internet works. And so what's the problem? Well, right now, internet services don't actually adequately reward users for what they're giving those companies. So tech companies are making tons of money consolidating wealth by farming people for data, essentially. And with new protocols that have been in research and development and launched and are live today, we can actually create fundamental paradigm shift in the way that internet services are delivered and consumed by people, and shift them to become active participants of these systems, where they're able to actually earn value back for their participation, for their contributions, whether that's a post, whether that's an upvote, whether that is answering a question on Quora. So this represents a huge economic opportunity for any internet connected person. Our goal is to make sure that Detroiters are early adopters for this, because we believe that'll change the economic dynamics of the city in a fundamental way that will help it sort of regenerate. And beyond that, right now a lot of the industry is sort of focused on trading and is this a store of value? This is a new economic or asset class. Like, how's it going to fit in? Is it going to be shoehorned by regulation? Sharing David's sort of sentiment, we believe that we're just going to operate until we're told we can't anymore, and we're going to ask for forgiveness, not permission, because if you really want to push the envelope and innovate, you can't be sort of hemmed in by existing structures. So that's kind of our philosophy as well. You go, Joe.
So when I think about blockchain, I like to think a bit about it a little bit like a race to the bottom, in this that no companies are out there building multi-billion-dollar encyclopedia companies because they're going to be outcompeted by Wikipedia. And in a very similar way, when you're building a open financial system and doing away with a lot of third-party intermediaries and centralized systems, you're making it much more competitive to compete on a lot of the fees that centralized systems want, and banks otherwise are going to find a lot of pressure on those systems to compete with decentralized systems that do away with a lot of that trust needed with intermediaries. So I think of it kind of the opportunity there is taking a system might not be acting completely efficiently and replacing some of the central parties who are mainly monopolizing specific parts of the industry, and kind of distributing that out and letting it on a much more kind of open system level. I think for dealing with regulation, that is probably the most interesting part of regulation to me, is basically where securities regulations come into play, because for an open system that like blockchain is, securities make it difficult to interact in specific ways. So a lot of that regulation kind of falls on how they whether systems pass the Howey test or not. So when you're building decentralized systems, a key question that the SEC often wants to know is how decentralized is the system, and that's something that's not appropriately defined. That hopefully will have clarity as it moves on, because if you're launching a system that's is on a path towards decentralization, at what point is it considered decentralized enough where it's no longer security? Because the regulations with securities versus non-securities is massive, and the implications are very large, especially if you're trying to build some open financial system where every DApp, a decentralized application that you interact with, needs a broker license. That's not a truly kind of open system that can benefit people on a global level. So I think that regulation, the clarity on that, and where that's going is imperative to seeing how the space evolves.
Cool, and I can address interest on the regulatory side of things. So part of our business at Benzinga is that we operate a media site. It's built for traditional investors, stock market, debt investors. But like I said, we cover a lot of crypto topics, and one of the things that's nice with operating a media site is that you get instant feedback. So we get several million people who come to our site every month. So depending on, we can publish several stories that may cover the same topic but in a different angle, and get immediate feedback on what's being shared, what are people engaging with, how is their time on page change, etc. And on the regulatory side of things, there's a ton of interest, from the trading standpoint. Significantly more so than big price movements, than rumors about a Coinbase or anything along those lines. When we cover something that's on regulation, we find a massive spike in traffic, engagement with that content, sharing of that content. So I think that's sort of a unique perspective on that question.
kind of started to get into the regulation there. I'm interested to hear what your guys' thoughts are on how you think blockchain companies are going to be interacting with banks, how they currently are, and how they might be as everything moves forward.
Yeah, I can tell you from experience that that's not a fun game to play. And if you're going to start a crypto company, just don't tell them you're starting a crypto company. Not that I'm into lying or shoving this back into the into the black markets, but honestly, the banks don't play a fair game. They have all the cards. They're not playing. I should say they're not playing with 52 cards. And so, from that perspective, it's very difficult for companies who are promoting this technology to utilize outdated systems like traditional banking. It's almost odd. It'd be like the founder of Uber taking a taxi to work every day and being like, yeah, I'll keep tipping you and keep taking me, and then one day his job is gone and be like, sorry, dude. So it's just it's very difficult to interact with banks if your business is based around getting rid of banks. So I would say that they've become, I don't even know if there's a word for it. They've become a passive aggressive, and not really offering or just not offering services completely to crypto companies. There are certain banks that are trying to participate because they see opportunity, specifically Signature Bank in New York, and I think there's one in California, Silvergate Bank, that works with the Gemini Group. So there are a few banks that are trying to be the bank to go to in the crypto space. But again, I think that's a band-aid, as it's going to be much more of a battle tooth and nail when the day really comes when people are choosing to store their assets on a blockchain rather than some centralized ledger like Chase or Bank of America or anywhere else. So I guess that's really it. They're not they haven't it hasn't really started yet. I think between the battle between crypto and banks, because I think banks are just starting to realize at this point in time how disruptive this is going to be to their business in the long term.
Yeah, interesting. I echo what he said about banks. If you say anything about blockchain or cryptocurrency to a bank, you immediately get forwarded to their compliance group, and then they shut you down. So the trick is to find a bank that is so far behind that they don't ask you that question. And if you need to find a bank, let me know. So is this loud enough, Adam? Okay. All right. So yeah, banks see their lunch getting eaten in the future by this technology, and they're not going to play nicely. However, I do think that they serve a very useful purpose in society today. I mean, the whole traditional economy is based around banking, and as much as banks get away with a lot of shady stuff, and have done egregious things that have really crippled people and economic systems, it's going to take a lot for crypto to supplant banks. Some of the things that we need to be concerned about is the usability of cryptocurrency, blockchain technology, because right now it's so hard to use that most people just can't possibly fathom having that amount of responsibility. You have to know how to secure keys, you have to know how to secure cryptographic keys. You have to understand that certain actions you take can completely lock you out of your funds. And the majority of people in society today are not ready for that. We need to make the systems easy enough for them to use that they can't hurt themselves with it. Right now, most cryptocurrencies are way too sharp. I feel that EOS and EOS.io technologies, which are some of those other chains I mentioned earlier, Warbly and Telos, they do have the right recipe, although we're still not fully there yet. There's still work on the usability side that needs to be done in order to really have people at the point where they're like, okay, I don't need my bank anymore. And beyond just the usability, they also need the penetration of some sort of cryptocurrency payment platform or something, so that they can actually pay their bills, buy food, do real things that people need to do to survive with crypto. So I think it's going to be at least 5 to 10 years until we start to see that. Might go a little faster, but it's still a whiles out.
So I think most banks will slowly adapt to this technology, in the sense that a lot of these services they offer will need to be more competitive and have lower price points. And what the exclusions that they previously had won't be as applicable, as consumers have other options and how they interact with these systems. That it'll force banks that want to stay in business to kind of adapt to this different technology and how it's being used, and the fact that consumers do have other options to use without them. I would say the most bullish case for the banks is that it's the mere fact that most retail customers don't do self-custody. Coinbase holds about $10 billion worth of assets, and retail customers, for the most part, don't spend a bunch of time thinking about how they're securing their assets and being fully responsible for them. As well as there's regulations requiring certain funds, over $100 million and such, to not do self-custody. So I think there'll always be reasons why banks or trusted intermediaries are doing custody, whether it's regulation-based and you're running a large fund, or you're a retail customer who would rather Coinbase or B of A, look after their funds. You can see Fidelity and these other institutions moving into custody, and I think in that case, custody, once you're controlling the assets or have possession of them, you do have quite a bit of power. So in the sense that whoever ends up custodying many of those assets do potentially have the ability to interact with them in a way that, as staking becomes more prevalent, and voting and all these different systems come online for these assets that have specific value, that the people providing custody solutions will likely still have a place. And for anyone who's retail based or funds that want to push this off onto someone else, it'll be a portion of influence they still have in this space as it moves forward.
Yeah, and I definitely agree with a lot of what you guys are saying. And I think that the conversation turns to how will cryptocurrency or blockchain replace banks. But I think really what the question is, how will banks work with blockchain? Because I think it's important to keep in mind that there's a lot of services that banks provide, in addition to just holding funds, writing loans, etc. Like they buy and sell companies. They provide trading services. On the trading side in particular, we've got I spend a lot of time working with banks on the services that they offer to their traders, and they're looking for information that they can give their users on some of the crypto assets. Because there's always going to be people who don't want to make a trade on their own, where they're just going to log into an E-Trade account and buy 10 shares of Ford, for example. They want to call somebody at JP Morgan, talk to them on the phone for half an hour, and then buy those 10 shares of Ford. So I think that it's the conversation really is, how are banks going to work with blockchain?
Okay, great. Well, I think I wanted to touch base on something you mentioned, Rob. You were saying that nowadays we need to figure out a way how people are able to use crypto to do the things they do on a daily basis. Can you talk to us a little bit about what the opportunities are right now and what are their current options?
Sure. Great question. So is just to clarify, is the question like, how would you go about paying for a coffee? Okay. So yeah, there is a lot of point of sale systems that enable this. Some of them are multi-currency, so you can use, the top 20 different coins, or so. There's a lot of different variety in this market. I've actually been looking at point of sale systems for a while because Urban Bean, which is a coffee shop a few blocks from here, actually used to take Bitcoin. Their point of sale got messed up, and we'd like to help them get it back online. So The one that I've been looking at recently, because there's been a lot of shady ones that I haven't felt very confident in. This one's called Pay to Mat. So Pay to Mat is getting some market penetration. It's multi-currency, so it's got those options. And I believe that the real recipe is the business should be able to accept a payment in crypto. However, crypto is way too volatile for it to be used like money. I'm sorry. If you think it's money, it's really bad money because it could go down by 20% tomorrow, and that'll wipe out your business margins. So a lot of businesses that are accepting crypto assets today need the system to automatically hedge for them back into U.S. dollars. Or, perhaps they keep 10% in crypto and 90% back to U.S. dollars, so they're at least covering their margins. So that's really the key for adoption of just being able to use this stuff in commerce, is having a good, mature point of sale that's easy to set up, that can automatically hedge. It's nice if they're configurable. So I know that there's some other ones like Bethany Schwarb. She runs a shop over off Gratiot that does T-shirts and all kinds of custom gear. We actually got swag. The hat that Brian Tutt is wearing is from her. We paid her in crypto through one of these payment systems. I think it's called Coin Payments, and that automatically hedges into cash for her. So she can accept Bitcoin and Ethereum and so on and so forth. She can say, I want to keep like 30% in the crypto asset and the rest back to cash. So these systems give businesses enough options where they can kind of tailor it for their use case. But in general, I think that that's more of a novelty right now because the penetration of crypto assets is so low and so diluted that there isn't a huge amount of demand. Maybe the people in this room and the people on Detroit Blockchainers, there might be a few thousand people in Detroit that really want to do this today. So it's not huge. It's more of a novelty. But that can change rapidly. So anyone else have?
Yeah, there's actually a couple interesting financial products that exist completely in this blockchain world without central intermediaries. Where you can lend, you can borrow, you can short, long stuff, you can make bets on prediction markets. But the user experience is just terrible. And, it takes you 6 hours to figure out what to do with it and how to interact with it. And you have to download a couple, different programs to interact with the system. That it's something that, one of the most anticipated applications in the blockchain space has 20 to 30 users a day, and it's just that a lot of these use cases are very interesting, but even for crypto people who are very interested in this, it takes a while to use it and figure it out, and they're not very user friendly, which hurts liquidity in a vicious cycle where no one ends up really using these systems. So I think until they deal a little bit with the user experience, they're probably going to be stuck in this cycle where it's difficult to get a mainstream use case for one of these things going.
I think one of the biggest movements forward for payments and everyday use will be, I thought I'd never say this, would be stable coins. And there's there's a few that are coming out that are really good. I'm a big fan of DAI, which is by the MakerDAO group. It's kind of a mathematical solution that stabilizes one DAI to equal $1 US at all times, and those solutions will be utilized more. We're seeing a lot of wallets and a lot of exchange platforms that are using DAI or TrueUSD or USDT or CUSD or whatever, all these other stable coins as base currencies for their applications and for their exchange platforms. So that we think was going to be a continuous shift and probably something to enable more and more use cases of payment softwares and vendors accepting payments in crypto to feel more comfortable with the technology.
Cool. And I'll hop in real quick too. In coming from a media background, I think that we're a long ways off until the conversation starts to change in the way that cryptocurrency is represented in a lot of the traditional media outlets. I think that as long as there continues to be a lot of this doom and gloom or look how silly this crypto investor was, or something along those lines. It's going to put a big barrier between the average person, adopting cryptocurrency as something that would become a part of their everyday lives. And I don't think that is something which changes quickly. So I think that's a hurdle that as a community we've got to figure out how we overcome, how we change that messaging, etc.
Okay. And Luke, to kind of build off something you just mentioned there, you said the average person that wouldn't invest in this in their daily life. How do you guys think crypto could be effective to, or rather, fundraising in the VC world?
Yeah, I think it was pretty obvious throughout 2017 that there was an explosion of fundraising through ICO, TGE, whatever you want to call it, issuing your own crypto asset, cryptocurrency. It's kind of gelled now into several different areas of focus, whether it's been an STO. Most people now think that all ICOs are securities, and they're the same thing as shares in a company. And then there's the utility token argument that some people are just issuing a gift card. So I think it's still early in that. I think that just goes back to the regulatory conversation we had already, and I think it's gonna continue to be fragmented in terms of, I think, all these island nations and all of these nations that feel they're not connected to the upper echelon of financial systems that exist today are going to implement looser regulations to allow companies and networks to come and base themselves in those jurisdictions. And groups that have the power and hold all the jewels, like the U.S., are going to continue to combat it. So I think I think it just goes back to that same regulatory conversation. But I think you will definitely continue to see, whether it's here or abroad, a lot of fundraising happening through this through these processes, whichever way you want to call it. And I think that you will see, or my belief personally is that once there's a change in the approach to the actual organizations, you won't see a giant shift in people's behaviors. So what I mean by that is a lot of what you saw in 2017 was a promise to get rich quick, and basically this kind of like IPO craze that really made no sense. And that's not really what all this is about. The organizations themselves were actually meant to be DAOs, decentralized autonomous organizations, not to be for-profit entities that were raising hundreds of millions of dollars to make more profit for some other shareholders that they seem to have raised money for also. So I think that DAO got a bad name through some events that happened with Ethereum and some other, some hacks. And my belief is that when the DAO comes back, the DAOs really flourish in their ability to operate using blockchain governance. I think then that's when we'll see lasting networks and companies that utilize the technology.
Very nice points, David. Thank you. Let's see. So ICOs, when people think of crowdfunding or fundraising in this industry, they automatically think about ICOs, or initial coin offerings, or ITOs, initial token offerings. I am personally very, very, very apprehensive about ICOs. I think that most of them are completely worthless. I think there's been at least 2 or 3 research papers that showed that like somewhere between 80 and 85% of ICOs at least were basically scams. So like there was no actual real fundamental economic model baked into that token that allowed that token to capture value in whatever app these people were building. Instead, they raised millions of dollars by promising some vaporware that didn't get delivered and issued some tokens on Ethereum. So I am very much, I will never do an ICO, and EOS Detroit will never do an ICO because we think that there's a lot of moral hazard there. However, there are other ways that you can raise funds. One thing we're seeing on EOS is this airdrop model, and that's where you give the token away, and then the dev team retains some. You create a market out of thin air. as long as you've got this thing trading somewhere, whether it's a decentralized exchange or a centralized exchange, creates a market out of thin air. You're not selling tokens that may be worthless. You're giving them away. And then if the market discovers that, hey, this token's actually valuable because it has some fundamental value prop, then the dev team can sell some of their allotment back into the market to fund themselves. So we've seen, this is sort of a new model, like a post-ICO model that we're seeing on Ethereum, or EOS, sorry. And beyond that, though, I think traditional VC is highly broken. It's super inaccessible. I think there's a huge opportunity within decentralized applications and the blockchain space to actually create, proper incentive structures that align people seeking funding and funders in a way that isn't so myopic. This is coming from someone who's been trying to raise funds for about 4 months. It has been a nightmare, and I don't wish it on anyone. So I think VC is pretty broken, and we can do better through decentralized applications.
So there are kind of two main points I really kind of want to talk about in terms of fundraising, and the biggest one obviously is regulation. It has a massive impact on what you can do and when you can raise money and how you can raise it. And obviously a lot of the ICO boom came from the fact that people had little ability to interact with any startup companies and be involved with them before ICOs came around, where they thought they could legally get involved with these new projects. So I think regulation is obviously has a massive part of that fundraising and whether or not it sticks around for a long time or not. And that's something that's kind of to be seen over the next few months. I think the second point is more about the token models and whether or not they actually have any value proposition. It can work for a little bubble that people will sell tokens that have no value and dupe investors into buying them. But on a longer term scale, unless they start building models that give the tokens actual value, whether they're equity like properties or not, that is basically imperative to there being any long term funding following an ICO model where investors buy tokens and are expected to have value within those tokens and for them to capture value.
Well, and I want to piggyback off of what Rob was saying with the VC market being broken in many ways. Being a media company, again, we hear from startups and talk to companies specifically in fintech all day, and I really have the sense that we're at a crossroads for how young startup businesses are going to be financed going forward. If we say, okay, the VC model is broken, people are looking for alternatives. ICO model is certainly one. There's crowdfunding as well is starting to pick up some steam. There's the funding through a product. So pre-ordering a product that doesn't exist yet with the promise that it'll be delivered in the future. Family offices we're starting to hear a lot as well. So I think that these next couple of years will be very interesting to see where funding sources come from for businesses. And it very well may continue to be VC.
Great. And the last question I'm going to have before we'll open it up to the crowd is why don't you guys tell us what is your favorite fintech project that you've seen in the market recently?
Sorry, Rob. My favorite project has to be Ethereum.
Oh, no problem. So fintech, does this include blockchain projects? Okay, cool. Man, there's so many interesting ones being launched on EOS right now. Let's see, one that we recently sponsored, it's probably the most complicated decentralized application that has been launched to date. It's called Chintai. It's a leasing market for EOS tokens. We're one of 11 BPs or block producers that have sponsored this, and essentially it allows developers to borrow or to lease rather EOS tokens so that they can prototype or run their decentralized applications without being exposed to the price volatility of EOS. So it's allowing us to decouple the utility of EOS from the price and not expose teams and developers to the price that just want to use EOS. And on the flip side, it also has created an opportunity for EOS holders to get passive income off their tokens by borrowing them to these developers. And so Chintai launched, I think, early October. It's been about a month. And there's already about 3 million EOS being leased on Chintai. And this is after probably about a week and a half at least of downtime due to bugs that were found during the launch. So the Chintai team is really pioneering a really useful kind of cornerstone infrastructure decentralized application on EOS, and we're really excited to be a sponsor of it. Chintai is actually being developed by a block producer called EOS 42. I think they're in the top 10 block producers on EOS right now. They're based out of London. But they do have a global team. They just are headquartered there, I believe.
So, yeah, my fund has long exposure to both EOS and Ethereum, so I have no dog in that fight. But a lot of those smart contract-based platforms differ in consensus mechanisms, which are very interesting. But probably the project that's more exciting, just in terms of presenting, is something called the Republic Protocol, which is basically a dark pool exchange, and there really isn't another project that's trying to build this out. And basically what these dark pools are is they're a way to trade assets without alerting the network what you're doing. So in the traditional world, 20 to 40% of equities trade through dark pools, and there isn't really an easy decentralized way to do it in the crypto world. So it's interesting to see these projects and this team work on hard problems using privacy technology and all these things to bring together to try to create this kind of system. So that's probably my favorite project at this point.
Cool. And I can't speak to a specific project, but what we're watching, and trying to figure out ourselves very closely at Benzinga is how the information flow is going to work. I mean, there are so many things going on at once, and I think the same can be said for a more traditional market like the stock market. But we've sort of figured out how we channel information in the stock market. There's a couple avenues that word gets out. And that's basically what we're trying to wrap our heads around and become a leader in.
Great. I'm going to open it up to the crowd, see if anyone has any questions.
Blockchains having use in inefficient areas, and the first one that kind of came to my mind is Detroit commercial real estate. It seems like there's so much that is just parked on, and there's so much that is priced really at some sort of value that they expect somebody who really needs it to come in, like maybe like the Illiches. And so it's a completely decrepit property, and it's for sale at this insane rate just because of the location. And I was just wondering if you guys, like, not necessarily have an example of it, but if you can envision some sort of mechanism that could take something like the fragmented and few and far between rich people only get to participate Detroit commercial real estate market and open it up to be more efficient for people like us to invest in.
So thank you for the question. So to answer the question was basically like, how can people who aren't rich participate in the sort of maybe inflated commercial real estate market here in Detroit? This reminds me of a good friend's project called Cooperative Capital. His name's Kwaku Osei. He's based here in Detroit as well. He's doing something called Cooperative Capital. He's gotten into a regulatory snare, but I think he's on the other side of it now. And his whole idea was, hey, what if we could have people pool funds together and then collectively decide what to invest in together in their own neighborhood? So it was sort of, he envisioned making it a DAC or a DAO. same thing. And so the whole idea is like, pools that allow a number of people to invest in the same property, so that like, if you're not loaded and you don't have hundreds of thousands of disposable income, maybe you could also participate. I really like that idea of pooling funds together to invest in something together. I hope Kwaku is able to make this thing work. And yeah, that's one example. I mean, you can also, if we open up access to allow people to track their property and transact the deeds directly through these networks, I think it'll create a wider liquidity pool and also allow arbitrage to take place in a better way, because it won't be so fragmented, and that could also kind of help the price discovery, so we're not left with just all these overpriced properties. So that's just an idea I've got. David?
Yeah, thank you. That was good, Rob. Yeah, I feel somewhat able to answer this question. I did do real estate prior to the crypto world, and would agree with the barriers for the capital requirements to participate in certain markets. And I think that the fractional share industry will evolve using blockchain technology, which is similar to pooling funds. I still think that you will always find a premium to be paid when you're a retail investor, and but I do think that the transparency and the availability of these fractional ownership investments will become more popular. You're seeing a lot of this whole space kind of evolved out of the Jobs Act in 2012. There's a lot of people who do crowdfunding and generally solicit their offerings, and you saw things like Fundrise and Realty Shares and all these companies come out, but the problem still lies in the secondary market. So you invest in these, you can go on in these websites and crowdfund a building, but then if you're an owner, right, you're a fractional share owner, if you invested $100, $200, you have no exit, you have no rights, you can't go sell your shares on an open market, and that's what blockchain will allow. So it'll be the secondary market. As an individual, you'll be able to participate then by buying a $100 tranche. I mean, it's similar to we were talking about raising funds. It's the same type of problem. If you go and raise money, right, from VCs or whoever, you don't accept $5,000 checks, not because you don't want $5,000, but because the administrative costs to onboard a $5,000 investor are probably not worth it. It's probably an economic loss. And blockchain is a open ledger that does all that administration for the sponsors and for the investors. So you don't have to do any of that paperwork or any of that administrating. Now you can administrate $100 investors, $50 investors, the same you would as a $50,000 investor. So I think it will indirectly allow people in the long run to own fractional shares of many assets.
Yeah, so I spent an hour and 51 minutes trying to vote this morning. And so with what's happening with West Virginia, Sierra Leone, military's doing some things, and with Prop 8 being on the ballot and hopefully passing, how quickly can we get on this?
Well, I think that it's all just bureaucracy. I mean, obviously, it's so much better and so much more efficient to vote on a blockchain. So it just becomes, I mean, it's a random dart, in the dark. But time this pain point becomes so large that we as a society vote in a treacherous way to implement new voting protocols. I'll let someone else speak on this.
Yeah, actually, we had a company go through our incubator program, I think it was 2 years ago, called VOATS, and they were trying to solve this archaic voting problem, right? So what they did is they actually started with, they had a 4-step process, and what they did was they started with you take a selfie, and then from your selfie you take a picture of your ID, and they use facial recognition to connect that. Then they use the KYC compliance from Yodlee's Instant Account Verification API to make sure that your name from your ID matched your bank account. And the last step was on the blockchain. So it's still in like beta phase right now. They went through our incubator program, I believe it was last year. But there are companies out there that are trying, but they have to go, they're starting with, basic like citywide elections, and it's gonna be a process. But, I know we just saw one recently that went through. So I know there are people out there that are trying to do it, and it's exciting to see what blockchain could really do to help revolutionize that.
Yeah, totally. Just piggybacking off that, the real hard problem is identity. There are no great blockchain identity solutions yet where you can have a cryptographic proof on a blockchain network that you're a certain person. Once identity, strong identity is what it's typically called in the industry. Once we have strong identity mechanisms that we can use on these different blockchain networks, it's going to open a whole slew of use cases, such as voting, where you have to enforce that each vote is from one person, right? And that there is no dual voting, and there's no way to Sybil attack it or create tons of ghost accounts that all get a vote. There are some really interesting companies that are working towards this, but strong identities is the real core of the problem, and once that's solved, I believe we'll see it will then be more of a bureaucracy issue. How fast can we get these different municipalities to adopt it?
And sort of going off what you're saying, Rob, where you're saying that the problem is identity. From the media standpoint, another huge problem that we have is the conversation around it. When we're hearing every day about Russian hacking and Facebook's shutting down 200 accounts of foreign countries trying to influence our elections, I think that it really, really kicks back, when we might be able to use something like blockchain to facilitate our voting process. And I don't know what an answer looks like for how we change that conversation, but I know it's something that our editorial team, it's sort of been like some water cooler talk is, okay, we believe that the future is going there, but we're sort of part of the roadblock that stops it, and we don't really know, how to influence that.
We got one question on the live stream, actually. So what is your opinion on careers in blockchain jobs and just the culture of the industry in general?
Okay, so the question was, what is our opinion on careers in the blockchain industry and the culture of these technologies, or companies, rather? I think there is a ton of passionate people in the space. I mean, our team has 10 people now, and no one gets paid. But they all show up and work every day because they're really excited about it. Of course, we're all earning equity in EOS Detroit and kind of splitting it up that way. But it's really a testament that, like, so many people are so fired up and passionate about this that they are willing to just put it all on the line and work towards it. I do think, as far as the culture aspect goes, we still do have a white guy problem, which tech industry in general does. So this is something that we should acknowledge and work to, build up cognitively diverse teams, because we'll build better products that serve more people. So that's just a tech industry problem in general, and because blockchain is like at the very edge of tech. Oh yeah, and sprinkle in finance, right, which is also kind of has some of its own cultural issues. That's one thing that we're very intentional. Yeah, there's totally a gender issue too, but we are seeing a lot of really awesome initiatives to empower women in blockchain, and I know in the EOS community there is the Empower Women proxy. There is Shios. There's a whole team led by females called Shios. They're another block producer. They've actually been out to Detroit for a guest talk before. So we have a diversity issue that we can all kind of intentionally acknowledge and work towards, making better.